Hey, Paul David Thompson coming at you, and answering the question is, how does a wraparound mortgage work? What is a wraparound mortgage, and how does one go about using it? Well, if you're a real estate investor and you have access to deals, but you're short on money, you don't have a lot of capital to invest, $10,000 or less, then a wraparound mortgage is an excellent technique for you. So first off, let's define what a wraparound mortgage is. It is a secondary lien that is placed around a primary mortgage. So you have a property, there's already a mortgage in place, or a first position mortgage is placed on there. The wraparound mortgage is the second position mortgage that is wrapped around it. And what's important about a wraparound mortgage is that it includes the details of the first position mortgage. The second position lien knows about the primary position's lien, and it even refers to and calls out the details and includes the amount of the primary or first position loan. So let's cover an example of how one might go about actually using a wraparound mortgage in two different ways. One where you're the lender and one where you're the investor. Let's start off first where you are the lender and a buddy of yours is an investor and brings a deal to you. Okay, so first off, there is a investor buyer. This is your friend that brings a deal to you. And then there's a first position private money lender. And then the third position is you. You are what we'll call the wrap lender. So your buddy brings to you this deal and he says it's going to be a $50,000 deal. He's going to buy it for 50 grand, and you know that he's going to need a couple $1,000, maybe right at $1,000 in closing costs to make it happen. So what you do is you say, as a matter of fact, I will do that deal with you, and then you go to your private network and you raise the $50,000. And so you find a lender who will lend at 6% interest for the $50,000 secured by the property in this scenario, and the payment on that is about $300. So this is the first position. And then what you do is you bring $1,000 to the table and you wrap that $1,000 around the $50,000 loan. So you're in the second position and you lend $1,000. And so you're going to charge, let's say, 15% interest. So your interest rate is 15%, and that works out to be about $50. And so what's happening here is there's a $350 payment being made. $300 of it goes to the first position lien holder, and $50 of it goes to you. You are the second position lien holder. And what's interesting is when you write out this promissory note, the promissory note is for $51,000 because it refers to the first position loan of $50,000. And so that payment is at $350. And so what's happening here is this investor is paying you, the wrap lender, $350. And then you turn around and you pay the private money lender $300. But you keep the 50. So you're making $50 every single month, and you're getting a return of 15% on your money, and the private money lender is getting 6% on their money. And the private money lender knows exactly what you're doing. You're not trying to be sneaky about this, but you went out and found the buyer, you went out and found this guy, you brought the deal to his attention, and you're going to be doing the loan servicing. The $350 payments that come in, you're going to take that, make sure they're paid, and then keep the 50 and then pay $300 to your private money lender. See, you are not acting as a broker because you're actually putting money in the deal. It would be a different scenario if you just brought this person and this person together and took a commission for that. That would be brokering money, and that you need a license for. This, you're being an investor and you're lending out money to this buyer, to this investor, to be a deal maker. What's really cool about this deal is you're making money for the next 20 years, however long this deal is written up for. So your $1,000 investment could turn into $12,000 over a 20-year period because you had the wherewithal to put this all together and put that $1,000 and put it to work. And now as you get those $600 of payments every month or every year, couldn't you maybe do this again and have your money compound on its compounding? And all you're doing is making a $1,000 loan. because you have taken two people and put them together. This is the power of deal making and knowing how to use a wraparound mortgage. Okay, let's do another example where this time you are the buyer and not the lender. So you come across a deal and you want to do a similar transaction, but you know you can raise money, and here's how you can do it. So in this case, you are the buyer. And you come across a deal that is worth $130K, and you found a seller who needs to sell a property that has a balance of $70,000 on their loan, and let's say that's at 4.5% interest, and the payments are right at $400 a month, right? So okay, but they have a little bit of catch up. Maybe they're $5,000 or $10,000 behind, and there's going to be some transaction costs, and you want to borrow, say, $15,000. So this is the primary position. You bought this subject to the existing mortgage. If you don't know what that is, you can follow up this link above where I talk about what subject to investing is and how to make sense. So once you understand that, then you say, okay, I'm going to buy this property sub 2, but now I'm going to borrow another $15,000. And you have a buddy of yours that will lend it to you at 15% interest. And that works out to be about $200 a month payment. So in total, you have an $85,000 loan that has a overall monthly payment, of $600 a month. But you believe this property will, say, rent for $1,250. $1,250 per month. Not a bad deal, right? So you get a check for $1,250. From that $1,250, you write a $600 payment. So the way this does is you have two choices here. You can make your sub 2 payment, which is $400. We'll put it right here, $400. And then you have your private money loan payment, which is $200. So what you could do is you could make a payment of $200 to this private money lender, or you can make a payment of $400 and make a payment to your sub 2 lender. The other alternative is you can make a $600 payment for this total 85% wraparound mortgage to your private money lender, and then your private money lender could make the sub 2 payment for you. Those are the two options. I prefer where I make all the payments. I'm the investor. I'm familiar with the property. I'm getting the rent check. I'll take care of the payments. And typically I find that the private money lender is typically okay with that, so long as I'm willing to provide proof that I'm making the sub 2 payment. Every quarter, every month, I can send a statement over to the private money lender to confirm that I'm making those underlying first position loan payments. And this is the power of being able to use wraparound mortgages, taking access to deals and taking your access to other people's capital and piecing them together to be a deal maker, a transaction engineer, instead of maybe just being a wholesaler and you make a few $1,000s per transaction, but then you have to go find another deal constantly. Well, why not do a deal like this where you find the deal and you're making $300 or $400 per month off of every deal, plus all the other benefits of owning property, and creating passive residual income that only requires a little bit of work versus all this effort it takes to go out and constantly find deals just to make the $2,000, $3,000, $4,000, maybe even $10,000 assignment fee. Generating passive streams of income is where you will generate meaningful wealth in your life. You are making money while you sleep versus always actively having to go out there and find deals. So let me know, have you done a wraparound mortgage deal before? Put a comment down below. What questions do you have? What is keeping you from doing this specific deal where you find a property, put it under contract, go and raise the money, and piece everything together using a wraparound mortgage? This has been Paul David Thompson. I have a podcast called Ready Investor One where I talk about the mindset and mechanics of real estate investing. If you like this video, make sure and give it a like and subscribe to the channel because I have more content coming. Hey, if you enjoyed the video, make sure and give it a like and subscribe to the channel so you can watch future videos, and make sure and hit the notification button so you can get notified when new videos are posted. And right now I have additional videos for you right here.